Hello and welcome to Jackrabbit Trader, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video I want to take a quick look at the benefits of joining the free Jackrabbit Club. The Jackrabbit Club is an email-only exclusive video series where we're going to go ahead and analyze some trade ideas and start to build your education based on longer-term trading. With that said, we really only look at the weekly charts in the Jackrabbit Club because it takes a lot of the noise of the typical daily intraday swings and everything like that out of the market, and it really allows you to concentrate on developing your identity, developing the trades and the setups that work for you, how to manage those trades, and formulates a process for you that develops you into a successful trader at the end of the day. So as you guys know, I've previously had the university, but I found it wasn't really helpful, and I was trying to figure out the best way to do it. And I think by doing it in a weekly video series where every week we'll send out a video, highlight a couple trade ideas, and go ahead and through those trade ideas kind of develop your education about what candlesticks are, support and resistance, how to identify some certain trades, how to take pullback trades, breakout trades. So we're identify all of that just with the weekly series in the Jackrabbit Club. So with that said, I want to take a look at a couple trades that I've made, and these are all real money trades, my actual investment accounts, longer term accounts, and these are 3 trades that I've made, and you'll see some work, some don't, but overall we need to learn how to cut the losers short and let the winners run. So that's what we're going to look at right now in this trade in Apple. So the white circles highlight the areas where I took action, either buying or selling. And what you can see is Apple was in this downtrend. Okay, you can see that downtrend here highlighted by this blue line, this trend line. And again, as we go through the video series and do these weekly videos, we'll have opportunities to expand on some of these ideas. But essentially, a downtrend is really 3 points along a line. 2 is good, 3 is confirmed, and you can see that we finally broke that downtrend back here in the July of last year. The stock went sideways and finally broke out on this huge move from 102 to 115, which I'm assuming was an earnings move. I decided at that time to get long the stock. All right, we bought the stock here at 114, and we put our stop down here around 102. And again, because we're using weekly candlesticks, it takes a lot of the noise of the markets out. And because it's a weekly candlestick, we have to wait for that weekly candlestick to close. So I do all of my longer term investing and longer term trading on either Friday afternoons or first thing Monday mornings. And the rest of the week, I do nothing. All right. I just let the stock work. And then over the weekend is really where I analyze everything and then make my decisions and put my orders in for Monday morning. But here you can see the stock moved up slightly, came back down, tested that original stop level. All right, came down as low as 104-ish, and then it started to rally, and it just went and went and went. And as it rallied, I went ahead and trailed some stops to previous lows. Again, consolidated up in this range, came up, back down, formed a small little consolidation over a 4 or 5 week period, was able to move my stop up, had another breakout, and then we started to get into the channel. All right, so you can see channel resistance came up in around the 150 area, pushed up into it, came back down, and I'd say, you know what, let's take half off. We've had a good run. All right, stock went sideways a little longer and then broke down below my stop level where I exited the other half of my position. And as you can see, based on this past week, stock has continued to move down. So with this trade, I took about a 3.5, I think 3.2, 3.5 R win out of that. And what that essentially means is I made 3.5 times the risk that I put in. So if argument's sake, if I was risking $100, I made $350. If I was risking $1,000, I made $3,500. All right, so that's the first trade there in Apple. Next one is going to be in Adobe. Similar situation, but you could see this one was a little bit easier to trail stops with. Again, had this nice uptrend line, small little consolidation, nice big breakout. Took a position there, stopped down here around 98.80. All right, and the stock didn't do anything for, I would say, let's see, we got September, and it didn't break out again until January. So for 3 months, stock went sideways, but that's okay. That's the point of longer term investing and trading, is you're going to be in these periods where you're going to underperform, and you just have to stick with it. So you could see the stock came back, tested that 98 level, all right, then started to bounce, broke out again around 110. At that point, we were able to trail our stop up to 102. All right, and then the stock just went on a tear and went and basically didn't break or didn't close below the previous candle's low until this bar right here in June. So from January to June, this was smooth sailing. This was an easy stock to stay long. All right, and then finally when it broke below that 140 level, I got out. And again, you could see here on the little trend line that it was a 28.83% move in the stock. All right, and again, took out about 3.2 or 3.5 R out of that trade. The last one, MRO, one that didn't work. All right, one that I was kind of thinking was going to set up very similar to the Apple trade, where again we had this downtrend line. It had finally broken above it, started to put in an uptrend, broke out here on the 28th, and that was really the highest that it had gone. So again, got long here, and our initial stop was right here around 13. So we went from 18 to 13, and while that is a significant loss percentage-wise, it was a 25.91% loss percentage-wise. The difference is we size our positions accordingly. So I didn't have a lot of risk in the trade. All right, I always size my positions to accommodate the max loss I'm willing to take. So while the other two, I made a 3.5 and 3.2 R gain, this one I lost 1.15. All right, so you could see that you're letting the winners run just by price action, and you're cutting those losers short. So this is the kind of videos I want to put out in the Jackrabbit Club. If it's something that interests you, please use the links below, sign up. We're going to go through the basics. We're going to go through technical analysis, as I said. We're going to start to develop your identity as a trader and go through all of the information that we need to really build your education and allow you to let those trades run and let those winners run and cut those losers short. So again, thank you for joining me. I hope to see you in the Jackrabbit Club.